Well, good morning, everyone. It's great to be here in Abu Dhabi. And we have a fantastic panel today. Digital assets are an asset class. Now act like it. But before we dive into the topic, let's start off with a couple of introductions. I'll go ahead and I'll pass it on to you guys. My name is Nikita Sashdev. I'm the CEO and founder of Luna PR and Luna Media Corp. We're a PR agency. That's our bread and butter. Been around since 2017. Headquartered in Dubai, offices in London and New York. And I'm excited to be here.
Hi, everyone. My name's Leo Groen. I'm a partner at Spartan Group. Spartan Group started in 2017 in the industry with offices in Singapore and Hong Kong. We have two main business arms. One is asset management, one's investment banking. We were founded by three former Goldman partners with the idea of building a mini platform for the industry. So today we run a liquid hedge fund, multiple venture funds, market neutral strategies, and one of the most active M&A advisors in the industry. So from first check-in through to exit, we're working with partners and entrepreneurs in this space. Great to be here and look forward to going to the topic.
Hey guys, my name is Akshat Vaidya. I'm co-founder of Maelstrom, which is the family office of Arthur Hayes, founder of BitMEX.
Fancy intro. Hi, I'm Richard Muirhead. I am co-founder of Fabric Ventures. They're on off. I'll hold it. Looking forward to the discussion this morning. I wore a suit. I think that's acting like assets are an asset class. So hopefully that's all it takes. Fabric has been around originally from 2012, 2013 with a broader remit to invest in stage startups, building on the kind of our core DNA of folks who actually build companies themselves. And then we tilted pretty much 100% into the space from early 2017. And we have about $250 million under management, and we work from the acceleration stage through to about Series A in deploying capital, and got offices in London, Luxembourg, and now Dubai.
Hello, everyone. My name is Melvis, and I'm the executive director of Canton Network. Canton is a public permissionless layer 1 blockchain that was purposely built for institutional finance. We uniquely combine privacy, compliance, confidentiality, and also interoperability to enable the large institutions to build their core foray within crypto and blockchain. In the sense that today, some of our core partners include the banks like Goldman Sachs, HSBC, BNP Paribas, to financial markets infrastructure providers like TradeWeb, DTCC, NASDAQ. And lastly, we also have some esoteric partners who are building, esoteric applications such as life insurance, sports wagering, and also physical oil and gas products.
Awesome. Fantastic panelists. So this past year has been quite incredible for the crypto industry. We've seen a ton of institutional adoption. We've seen the rise of ETFs. We've seen digital asset treasuries. We've seen a bunch of crypto companies, do IPOs. So this type of institutionalization has brought new legitimacy to digital assets. So backstage, I was asking some of you, what does this panel actually mean to you? That digital assets are an asset class, now act like it. What does this mean? I want to start off with that as an introduction.
So digital assets as an asset class, right? I think there's really two main things that have happened this year. So one is obviously the large development of equity companies hitting public stock exchanges, and trading their securities. And then the other side, I think, is more the product distribution side, which is stable coins, right? I think we will remember 2025 as a year of stable coins. Companies like Tether being public about their profitability, the types of things that they're doing. Companies like Circle going and IPOing, and really that convergence of fintech and people getting excited about stablecoin rails and this payment network that's really being built on the back of, I guess, many of the iterations and developments of blockchain technology that's been happening over the last 12, 15 years. So for me, those are two very different stories, and we touched on digital asset treasuries. We can spend more time making fun of some of them and talking about the way that this is affecting the industry. But the public equities market is very much a securities market. If we add up and aggregate the entire crypto industry, I'm talking all market cap of tokens, all equity value of crypto adjacent businesses, we still get to a number that's less than 5 trillion, which is smaller than Apple, right? One single stock market listed company, and they're not even the biggest company in the world anymore. So when we talk about where we are actually in terms of adoption, we're still nowhere. It's very early days in the trend and innovation and adoption of digital assets that we're all excited about. But we have to also take a step back and remember that as an asset class, we are still smaller than one single equity business, and there's a very, very long way for us to go before many of the things that we're all talking about and envisaging really comes to life and plays out in its own form. But
Yeah, totally agree. I think I would also just add that, like you said, right, it's a very small asset class at this moment, but there's a symbolic shift that happened obviously this year in 2025, which is both New York and DC finally waking up to what's been happening for 15 years in blockchain tech, and it's still very early days. It's kind of like it's easy to take it for granted, but it's been basically 10 months since we've seen DC make the shift. New York, maybe once the DAT stuff started happening, um, that's when we saw a lot of New York kind of pivoting in this direction. The next 10 years will really help that mature. Let the blockchain industry really become a mainstay within traditional finance.
So trying to build on that, I think we'll go back perhaps and talk about some of the potential that happens now that we've had stable coins erupt onto the main stage, and that's kind of the thin end of the wedge of tokenization of a whole raft of different existing financial assets. And I think standards there have been critical, and we know the shift in the regulatory stance in the US has also been pivotal. I think it's both legitimized and to some degree done the opposite. The actions of the US administration over the last year, which has been kind of created its own turbulence for us as an industry. But going back to this question of kind of what is an asset class, and it is true that, and the way I was talking a little bit backstage about that, it's kind of, when I was starting in venture, best part of 10, 15 years ago, there was actually even this question whether venture was an asset class, whether you could, at arm's length, kind of allocate capital to it and understand your kind of risk return profile you were taking on, or whether it was just more like there's a couple of firms that are probably going to do well, a couple of firms that do well and who are doing, engaged in a certain activity does not an asset class sort of make. And I think taking that thought, even though it's true that we now have digital asset treasury companies where the underlying value is delivered through tokens in a listed vehicle in exchanges like NASDAQ, and we can talk about that or whether it's what the promise of that is. I think we still got an issue, which is those treasuries that are working out basically exist off the back of a very simple narrative around something like Bitcoin, something like Ethereum, something like Solana. That's probably the easiest and simple one where investors are not going, I understand the discounted cash flows attached to that ecosystem, and I can do a fundamental analysis. And I understand there's many different types of tokens like that I can do the same analysis around, and I can therefore allocate with some reasonable level of confidence to that as an asset class. That hasn't happened yet. And I think that touches upon a pivotal moment we're approaching as an industry, where we realize we actually have to grow up and think about the cash flows that actually our ecosystems are generating, and do some fundamental analysis around the value that should be behind these different tokens, and probably some new analysis. It's not just mimicking a company. You have to think about the network effects that exist in Web3 that don't exist in traditional businesses. And I think some of that analysis has been held back by the regulation itself, because we didn't want to be perceived to be a security or suddenly have enforcement come down on us. But hopefully now, with how the tide has sort of changed on that, we can get some spreadsheets underway and actually do some maths on what the value of tokens in our space are.
Yeah, so my fellow panelists have spoken about how this is seen as a new asset class today. So to add on to that, I'd like to go to the fundamental initial level of asset classes, in the sense that at the end of the day, asset classes and finance are all about ledgers. So updating the cash ledger versus the asset ledger. And within that, over the course of history, initially started with messaging, as in people running around with paper certificates as mail carriers moving asset movement adjustments back and forth. Then around 1970s, with the advent of Swift, now we had electronic messaging. And then most recently, now with blockchain, we have digital ledgers. So with that, there's atomic settlement, and in addition to this, now we have more improvements in the current financial markets and advent of new assets. But today, we've come a long way in the sense that we now have institutional grade infrastructure. We also have institutional workflows that have been built into the digital asset ecosystem. And lastly, with regulatory clarity, we're at a better state than we were previously.
Amazing. So, Lior, you touched base on how small we are compared to capital markets, how we have such a long way to go. Richard, you also mentioned that we need to grow up. Melvis, Canton has been all over the news recently with its institutional type of partnerships, interoperability. Um, we work with a lot of L1s, and we haven't really. I think I was quite pleasantly surprised to see the amount of headlines you had coming out with your institutional integration. Um, why hasn't this happened before with other L1s? What has changed now? And you guys just are newly launched as well.
Yeah. So for us, it's been more than a 10-year journey to get to where we are, in a sense that we took time to learn and take lessons from the existing developments that occurred. And what we kept seeing is that over the journey, many people kept thinking and building within binary terms, in the sense that you're either making trade-offs, either building on a public permissionless chain or a private permission chain. But then when you zoom out, life isn't heterogeneous, in the sense that there's a mix in the flavor between privacy and also transparency. And so in building Canton, we took a step back and thought, okay, within the internet, you were able to go to a public website like Wikipedia or a sports website. And within the same protocol, you can go to a private website like your bank account. And even within your bank account, there's access controls, risk controls. You don't get to see everyone's information all at once. So we took these lessons and built Canton by enabling it to have the core components of both privacy, configurable privacy, and also the ability to enable transactions that are composed across the whole network. And by doing that, the institutions have regulatory requirements or client confidentiality requirements as well. But the greatest thing about blockchain is the composability capability. And so by enabling a blockchain network that allows you to have configurable privacy, auditable data, in addition to that, access controls around like being able to have your own horizontal scaling should you want to, similar to the internet, but then have the ability to compose transactions back and forth. It's what's needed, in the sense that institutions cannot fully accept the core governance of one network. A big example, if a large bank or government is issuing bonds and then there are NFTs and meme coins popping off on the chain, guess what? You're going to be inundated and not be able to facilitate your trading capabilities or issuance. So Canton, we took those lessons and made sure that we can enable both sides of the coin.
Yeah, and I think that that's very important. It was actually one of my questions is as we do kind of go into the mainstream with more institutional adoption, how do we balance the true essence of which Web3 was built upon, which is decentralization? So I'm curious from the other panelists, how important is it to maintain privacy, decentralization while we move into more institutional adoption?
I mean,
Akshat, maybe you can go.
yeah, from our perspective, so Maelstrom is a VC shop. We also do liquid, and we're in the process of raising a private equity fund, so we touch different parts of crypto. But putting on my VC hat, when we look at the narrative of decentralization versus institutionalization, we don't really see it as a conflict. We see it as kind of there'll be initially kind of two instances of both, and over time they'll integrate in ways that Richard was kind of alluding to. That one day you're gonna have. Right now you got like three statement cash flows statements, right? Financial statements. Eventually you're gonna have a fourth, which is gonna be tokenomics integrated into that, and that's more of like a 20-year kind of horizon. Along the way, two will exist simultaneously and then kind of come together.
I was gonna. I mean, I think it's along the lines of your question, but I was talking to folks who are kind of doing the initial tokenization of assets through ERC20 or 1400 or 3643, I think it is, all the sort of standards on Ethereum. And let's shout out to Ethereum. I think it's still kind of where most of the action is still happening, and I think it's a tide that will lift all boats if we back it. But nonetheless, I think the points about building networks that can support privacy, which is something we've seen from Ethereum at the last DevConnect down in Argentina, and is critical. And I think that's something that Canton's bringing to the table, but that in such a way that we can still support permissionless, which is exactly what you were saying, in those environments is key. And so from talking to folks from Ondo to Securitize to Centrifuge and so forth, who were trying to take these assets and distribute, tokenize them and distribute them, T-bills and others, there's still a real kind of dissonance, or I don't know, whatever metaphor you want to use, impedance mismatch between the two worlds. They're not really, the traditional world of asset distribution is not ready for sort of self-describing tokenized assets that are permissionless, can be composed, can be used as collateral wherever you want, and can be composed into other financial transactions using a decentralized finance sort of ecosystem. That's not yet happened, and I think until we can trust not third parties, but properly sort of put privacy down into the protocol layer, put identity down into the protocol layer, have KYC and AML happen in the background between different participants in a decentralized financial sort of infrastructure, we're not going to be able to fully get there, because those things are essential ultimately for for the global financial system to be working in a way that we all, in a healthy way, the way that we want it to work. And sort of technically and architecturally, there's still, there's a disjoint between the two worlds.
And I think there's also quite a big disjoint in the sense that like RWAs, they're the main focus. I was just at Clear Street and Cantor's event in Florida, and these in private investment banks, that's the only thing they were talking about is RWA stablecoins. But how do we balance the speculative retail investors with those who actually want to participate in these RWAs? I think that's like a big mismatch as well. And I think for those of you who have been in the space since 2017, 2018, we're used to these like ICOs that, made a lot of money. And I think gone are those days. So how do you see the balance? How do you see these like retail investors coming in and actually using these RWA platforms?
Yeah, I'll take a first crack at this because I think it's really one of the most topical areas of the industry now, as the inflection point goes in terms of distribution of and penetration of like people actually touching crypto. I mean, you always see the cycles of how long the internet took to get adopted, how long Bitcoin is taking to get adopted, and how long is crypto rails taking to get adopted. I think the real catalyst, and that's why it's always for me humbling to have this sanity check and honest assessment at, especially at year end, where December 2025, it's been a quote unquote blockbuster year for the industry with a lot of things happening in New York and DC and professionalization. The other hand, though, what have we actually seen in terms of people actually growing the penetration of stablecoins and use cases that are there? And I think this is where we have a really sad reality check, which is outside of many emerging markets, Latin America, Africa specifically, where a lot of the crypto exchanges locally, their biggest use case is stablecoin infrastructure as opposed to Bitcoin, right? If you look at North American exchanges, European exchanges, the assets that people are holding on these platforms are Bitcoin and other highly speculative or layer one kind of assets. This is a fundamental shift between the North and South divide in the world of what are people using crypto rails for, and what makes me excited about it and why I think this is worth spending the next decade focusing on is because all of these things happen exponentially once you've got the network effects going, and where we are today is anyone's ability to actually onboard and participate in RWA assets, so yield bearing assets, let's say the most basic thing, treasury bills. The fact that people globally have access to permissionless pools that allow them to tap into that and have a US dollar treasury bill linked product, for a lot of people in the world, that is already one of the most innovative products that you could have come and offer to them. They don't need Bitcoin. They don't need to hear about 17 other layer ones that are going to change the world. They just need that first basic access to a financial instrument that is, in many instances, more stable than their alternative, which is a local market currency in a high inflation environment. And that's already enough. And what I think we're going to see over the next 3 years is more and more regional dominant players actually onboard hundreds of millions, if not billions, of users into their platforms, gated communities equally, and local ecosystems. And then that will be the next iteration of, okay, we have people that have assets on chain in some capacity. What can they do with it then? And I think the RWA platforms are 2 steps ahead of most of where the real industry on the retail use cases are. And we're still trying to backfill that. But that's something that we're starting to see over the next 2 years. And it's one of the areas that we're most excited about and most focused on at the moment.
And Akshat, Maelstrom has strong conviction in the RWA scene.
Yeah.
How do you coexist? How do you see tokenized securities coexisting with native crypto assets?
Yeah, so we believe that there's no real conflict between kind of the retail side of things and the traditional tokenized path, a regulated tokenized path. I think that eventually, probably this year and next year, equity perps will be the name of the game. So everything that happened with Hyperliquid, now Lighter, and other platforms that go crypto native first will probably leapfrog all of the regulated players who try to go, let's tokenize assets and just do exactly what we used to do, just but it's on chain for no reason approach. So that leapfrog will probably happen in the next couple of years. So for us, when we look at investing strategies and you guys are looking at investing or incubating or whatever, if you're regulators here, that's probably the direction you want to go and spend your time. Um, we've seen players try to do the regulated tokenization stuff for half a decade or more, and it hasn't really gone anywhere. But
It's the end of
uh,
every cycle.
exactly, yeah,
When
that's
people are talking about that, that means, okay, yeah, we're in the bear market.
yes, precisely. It always comes back, right? But now, yeah, equity perps. That'll be a buzzword that you'll hear more of in the next couple of years.
Richard, I'm curious to hear your thoughts on equity perps. I mean, you've been in the .com phase to cloud phase to crypto since 2009. You've been at the forefront of the technology. So what do you think?
So I mentioned you backstage. I've got a pretty good track record of being a little bit too early. So what I say here is not investment advice on the basis that you might get burnt by the time it actually comes to pass. Um, but I wanted a good example of that actually is when I was on my way to a conference in 2018 and ended up hitching a ride with a bunch of FT journalists to get up the hill and then got reported anonymously for saying like, you don't get it. The world's capital markets are going to be consumed by the world's crypto capital markets. Ultimately, everything will get tokenized. But to the points already made by my kind of fellow panelists, it takes time for this to kind of unfold. I do think this year though, and I know very little about. I've never been in kind of the trading sort of space. It's been kind of building bits of engineering and then getting into backing other people doing it. So I don't know which financial instrument will kick off next. But two points just made by the fellow panelists here. One is, this year obviously we had stable coins hit kind of mainstream because of the Genius Act. It's now been sort of baked into the fitness, the health of the U.S. economy because of its participation in the T-bill market, because they have to be backed by a lot of T-bills. I think therefore the genie is out of the bottle and we're not going to go backwards on that. I'm not sure if regulators understand exactly what they've potentially unleashed or kind of the animal spirits have been unleashed by that approval that has been implicitly given to the tokenizations of existing financial assets. And I think your point of cash is sort of related to my one. I think at the moment it's quite hard to bridge the old world with the new world. Therefore, the speed in adoption is likely just going to come in the new world where you get the sort of you get more network effects. You don't have the kind of resistance of the old world to contend with, and exactly how the regulators deal with that, we'll have to wait and see. I think the bit for me that's more sort of further in the future, but I still think is going to happen, is that the rest of not just existing financial assets, but kind of every bit of activity that we involve ourselves in will get tokenized. That we're particularly fond at Fabric of at the intersection between Web3 and AI. That actually Web3 is critical for the way in which you can organize all of the resources required to meet the demands of the AI push that's going on right now. That's to do with like tokenizing GPU resources, GPU hours within these big clouds that are being built, but also tokenizing data assets. But it's quite well known in the space that making kind of economies around selling data is very complex. It's related to this token economics point. So it is sort of over the horizon a little bit, but I sort of look forward to the stage where, whether it be your fitness activities or the negotiation of your divorce, you're contributing a little bit of your data to these AI applications, and then you're making them better at ensuring that we as humans have a better life, and you're getting somehow rewarded for that. But that's, I think, is still a little bit over the horizon.
It's very interesting. You touched base on Genius Act. We talked a little bit about Clarity. We talked about stable coins. All of this is very US centric. And I think it's important to remember that there are still countries with large economies globally where crypto is banned still. So when we say that crypto or digital assets are now an asset class, doesn't matter as long as like the US is leading the race, what the other countries are doing in the world?
Two short points on that, just to
Yeah.
kind of comment from the underdeveloped nation of the United Kingdom. We and I won't have my finger on precisely on the status of all of this because it continues to unfold. But the Bank of England spent a long time talking about central bank digital currencies, kind of missing the opportunity to support commercial stablecoins in the way the U.S. government has had, and then just recently in the draft legislation around stablecoins, there's a restriction on the stablecoins that you can hold, both as an individual as an institution. Which again, it's like, okay, come on, so these are the kind of countries where, in a sense, crypto is still kind of banned. And then actually just straightforward banking challenges. We're just trying to get paid by, let's just say, a very well regarded top tier Web3 institution, and they made a payment to us, and the bank, it was actually a neobank, not even like an archaic one, rejected the transaction because it involved an entity from the digital, the crypto world. So that was happening in UK, in the EU today. That still needs to be fixed for us to get to this nirvana, that we're kind of talking about.
Curious to hear from the other panelists on kind of geographical adoption outside of the US and what kind of part or importance it plays in digital assets being recognized as an asset class.
Yeah, I'm based in Hong Kong, and our firm has been in Hong Kong and Singapore for a while. So I'm around a lot of these developing countries: China, Vietnam, Philippines, etc. From my vantage point, it looks like while in many of these markets crypto is banned or highly restricted, uh, it's actually ironically those markets where retail adoption is actually some of the highest. You look at China nowadays with a lot of what's been happening with the economy, things, growth rate slowing down, fear over financial repression from the CCP. A lot of Chinese money has been exiting China through Hong Kong and Singapore via crypto exchanges, um, and trying to find ways to bypass their restrictions. And it almost feels like they're getting more tethered to the global financial system via crypto
Hmm.
rather than uh, via traditional markets, if that makes sense. Because actually, it's permissionless, right? So you can access, especially when equity purchase becomes a thing, you'll be able to really touch U.S. financial markets in ways that were never possible before. So it's kind of ironic. It's like doing the opposite of what you'd expect.
Is this the time when you can share some alpha on which company building an equity platform you've backed, so we know?
That
if
we
you-
backed?
Yeah.
lighter. That's one.
Uh,
That's why I'm working on it.
Amazing. Melvis, do you want to add on to that?
Yeah, so generally, I wanted to add that at the end of the day, everyone likes to look to see what the leader is doing in the sense that expanding beyond crypto, we're at 3.5 to $4 trillion market, but then globally in traditional markets, over 500 trillion. And so the capital of finance is pretty much within the United States. So as you can see, this over the course of this year, as clarity has come about within the Americas, other regions and other builders have started to get more involved, and institutions will start to get more involved in the ecosystem.
So, do you guys think like we need a unified regulatory system, or are we going to continue kind of being segregated? I know this is something that comes up often, but I think it is an important topic. I know we hate talking about regulation, but it is important because I think it is one of the aspects that is hampering the growth of it just globally.
Yeah, I mean, this is probably one of the most interesting areas, and what crypto is all about ultimately is bottom up initiatives that have created initially Bitcoin, obviously, and the adoption of it. But nowadays, I mean, even if you look at securities laws and capital markets globally, you don't have anywhere near, I would say, consistent regulatory environments. I mean, the way the US regulates securities and runs capital market infrastructure, very different from Hong Kong and other tier one jurisdictions, very different from emerging market exchanges and securities exchanges. So even within securities, if we talk about the biggest asset class, even or the bigger asset class, even there you don't have consistency globally, which I think is one of the impediments and like speed bumps that we're hitting. But what that also creates is the opportunity, because if you actually believe in what this industry is doing, the way in which it's permeating and presenting itself as a standardized product globally, that's adaptable in different ways, and you can create structured products off the back of collateral and so many things within the industry, and RWAs that are tapping into digital asset liquidity to tap into real world assets, like that hybrid crossover. All of that still comes back down to you having digital assets which are seamlessly composable and transferable, built on digital rails, right? And I think certainly our view and my view is that what we're building in this industry and what should be built and what we hope is being built is really something that is globally interoperable, scalable, and setting a new standard. And that won't be able to lend itself perfectly to any single jurisdiction and capital market. It will coexist alongside all laws and regulations. And you see that playing out in the tech industry today. I mean, Amazon, Google, all the big guys are running into local market challenges in the way that they're running consumer platforms. And it's always called privacy, it's financial resources, it's not paying taxes, it's whatever they're doing wrong in whatever country that they're operating in. Those companies still exist and have billions of users globally, either retail or B2B businesses. And that's what we see emerging in this industry as well. The financial fabric and infrastructure lends itself perfectly to a global market and is perfectly scalable, but it has to adapt to the market realities and individual markets. And I see those as speed bumps getting to the ultimate destination that we're going, which is everything running on a type of distributed ledger, rather than that being legislation baked into saying we can do digital securities now in the US or not.
We've been talking quite a bit about institutions and organizations in this panel, and I think it's important to remember like retail is kind of the backbone of the crypto industry and adoption. So, and funny enough, I think the stat is like 9 out of 10 people don't own crypto today. So, I'm wondering how important you guys think education is, and maybe Melvis, I'll start off with you because I know that you guys are doing quite a few initiatives to educate your audience. So maybe you can tell us a little bit about that and the importance of educating the market.
Yeah, education is very key and critical. But then, in addition to that, is also after having, or in conjunction with that, is also having access. Because in today's world, information moves very, very fast. And on top of that, too, that information can be easily manipulated, adjusted, and used for different means that are not the purpose of the initial information distribution. And so, being able to have good access to quickly act on the knowledge that has been distributed is also very important. And the great thing is that with blockchain, this is enabling people to have, with the use of just an internet connection, the open source software that we have in order to take advantage of building new applications, and then from there launching it, and through wallets, other people can come and utilize the utility of the token and the asset. And so with that, having local communities and distribution partners globally is very important to help facilitate the education that we're talking about, but then enabling the capability of those communities to have the access to partake in the activities that are being distributed. And that's what blockchain helps to offer.
At the risk of sort of sounding like I'm talking about Ethereum and then I sort of contradict you on education, but I would say that we don't want to focus on education.
We don't want to.
Focus on education. But the reason I say that is that if we're having to focus on education about like what is a digital asset and why you should use it and why you want to come into our community or whatever, we're still dealing with kind of early adopters or even visionaries for what the potential is. We need applications that just are better, like personal banks. That you can move your money around at lower cost. It works 24/7. You get a return. You're not even thinking about that. It comes back to you. And folks are working on that, obviously. I think you can see this, just about everything's now becoming an on-chain bank, whether it's Revolut or Aave or whether it's Robinhood or, any of these folks. And hopefully that's where we get to, both for consumer propositions and also for kind of, for businesses. So I'm just for making the point that that it's good to spread the word, proselytize, but at the end of the day, we're not going to have early majority mainstream adoption if we actually have to go through an education phase.
Yeah. I'd love to continue the panel, but we need to wrap it up. So in a closing statement, in one word, what do we need to do to get digital assets to be recognized as a true asset class by institutions? In one word.
Use it.
Actually, what about you?
Same there.
Use
Virality from the bottom up will lead to change from the top.
Virality. You've done an incredible job with that.
Stop meme coining.
Stop meme coins.
Just one word?
I guess you can do 2 or 3.
Yeah. Facilitate digital native assets. Yeah.
Amazing. Well, thank you so much. I hope you guys enjoyed the discussion.